Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our guest. That's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Thank you for having me.
All right, the unofficial kickoff to earnings season starts tomorrow morning. We've got Delta, we just discussed. PepsiCo on the flip side, down 4% so far this year. It's been lagging. But, Andy, has this been a trend that you guys are seeing according to your data that maybe some of these consumer-based staple stocks are taking some pain here where the consumer is starting to lighten up on spending a little bit?
Yeah, it absolutely is. I think, when we look specifically at Pepsi, there's really kind of three things, I think, working against Pepsi. Number one is inflation. The company's even come out and called this out as a real pain point for the company as they try to convince the lower income buyer that they still need that bag of chips when the wallet's already tight. And, how much can you really pass through input costs on, your Quaker Oats or your bag of Doritos or your can of soda? It gets pretty tough. The second, I think is a minor thing, but it's actually getting pretty real, and that is the Ozempic effect. I think that there's just a decrease in overall appetite. We've always had a joke here at Likefolio, never bet against the American eater, but that was before Ozempic, and we're really starting to see a lot of curbed appetites out there starting to impact these salty snack makers, and I think that's probably a trend that's going to continue. And the third, if you look at consumer happiness levels for Likefolio data against all of the other, beverage makers, is just Pepsi's facing on the beverage front just increased competent competition. You walk into a gas station and you try to decide what drink you're going to pull out of that cooler. It's a very different decision than it was 10 or 15 years ago. You've got energy drinks, you've got bubbly sodas, you got all kinds of different flavors of water. And, you've even got Dr. Pepper now as the second leading, taking that number 2 spot from Pepsi in terms of the soda of choice. And so, those three things combined have just put an overall gloomy cloud over Pepsi. But I think, at the end of the day, this is a really well-run company. They've increased dividends 52 years in a row or something like that, kind of one of those dividend aristocrat stocks. So they continue to deliver cash flow for investors. I think they will continue to do that. It's just, how are they going to grow in this environment? It's pretty tough in an inflationary environment where people are passing on the salty snacks at a higher rate than ever.
Yeah, Andy, they show all the characteristics of a consumer staple, which is they're doing well in terms of earnings per share because of cutting expenses and layoffs and trimming their overall expenses. But I'm going to take a different attitude on this. Look at the price of corn futures. Corn futures in April of 2022 were $8, right? Yep. Now they're under $4. They're right around $4, $4.07 to start the day today. If their input costs are crashing like this, like they've done, if you look at corn, why isn't the overall prices of these goods coming down? Now, I understand there's a lot of things that go into making something like this, but commodities, input should be one of them, right?
Yeah, it absolutely should be. On the other hand, it takes people to put these things together. Labor costs are going up considerably. It takes fuel to move them from place to place. It's a pretty tough environment for Pepsi. I think that, they're just kind of finding that ceiling of what they can actually charge for these items. And it gets pretty tough when you're talking about something that's normally priced at, whatever a cola is. Let's say it's $2. Do you take that? The price jump becomes very real. You can't just take it up to $2.03 or, you have to kind of go in 10%, 20% increments at those price levels. So I think that gets tough for them as well. But again, this is a company that's executed very, very well for over a half a century. I think we can continue to see them doing that. The biggest threat I think I see for Pepsi is just the overall expansion of competition that is headed their way. And I really think that Dr. Pepper taking that number 2 spot as the soda of choice in North America is as a little bit of a canary in the coal mine. That would be the thing that concerns me the most as an investor in Pepsi, because you always thought of them as knocking on Coca-Cola's door. But, when you fall that third spot, that's a pretty big move.
Yeah.
Yeah, when you look at the happiness levels here, Andy, and we've seen Celsius, which has your highest happiness ratings, than Dr. Pepper. Celsius has seen some pain also, along with some other consumer staple names in this space. But when you look at Pepsi down there, I find that really hard to believe, because I just remember a couple of years ago when Pepsi was just knocking it out of the park, because they make a lot of their money, or most of their money, on Frito-Lay now. And, that seems to be, the most popular brand out there.
Yeah, well, the biggest problem that Pepsi has isn't the quality of their product. The reason, when we dig into these numbers, the reason why Pepsi has fallen off in terms of consumer happiness, it has nothing to do with quality of product, and it has everything to do with the price of the product. Most of the complaints that we're seeing are that the price of the chips, the price of the cola has gone up. And, people are getting upset about that, as they are, every time they walk through the grocery. It's one of those easy comparison products, like a gallon of milk, like a gallon of gas, a bag of Doritos or a can of pop. How much does that cost you? And it's one of those easy things that people can compare to what they used to pay and remember that. And it becomes a point of pain at some point, and that's where we are right now.
Okay, Andy, the stock's at 8-month lows here. Popped up a little bit, up about 0.5% today. Do you guys have an earnings score on this one?
Yeah, officially we're neutral, but I think the stock has come down enough that most of the risk is out at this point. I think if you had another reason to be bullish on this, the bar is pretty low for Pepsi going into tomorrow. And like I said, the dividends that they pay, it makes an attractive value candidate. I think you could see a relief rally after this, and that's about it. I don't see any reason for any big move either way.
Moderated move to the upside. All right, great stuff. Great data as always, Andy. Appreciate it.
Thank you, guys.
All right, that's Andy Swan, co-founder at Likefolio. Kev, you heard him. I mean, 8-month lows it hit earlier on in today's session. Option market's pricing in about a plus or minus $5 move in the shares.